All these big banks that were too big to fail are now even bigger than they were before. And now the next time they fail, it's going to be even more disruptive to the economy than had we let them fail last time. In addition, by propping up these insolvent institutions, a lot of smaller banks did fail or were merged or bought up or went out of business. If the government had stayed away, the smaller banks that weren't as leveraged up, that didn't make as many mistakes, that didn't drink all the Kool-Aid that was poured by the Fed, the more competent banks would have picked up the slack. They would have increased market share. They would have picked up additional customers. They would have hired some of the laid off employees, and they would have been rewarded for their prudence. Instead, they were punished, and we rewarded the profligate, the incompetent. That is the problem with government, right? In the free market, it's kind of like evolution, the survival of the fittest. The best managed banks, the best run, the most competent win. But in the government system, it's the least competent, it's the most reckless, it's the greediest, it's the ones who have the most political connections. They're the ones that win, right? So it's a perverse system, the survival of the least fit. And so instead of having a stronger banking system as a result of the crisis, we have an even worse, even weaker system that's prone to an even bigger crisis, which unfortunately is not too far away.